Hello everyone. I often get asked how traders manage to hold their heads during wild volatility and massive market moves. On this chart in front of you, you can see this massive move down in the Nasdaq over the last period with the tariff announcements by Donald Trump. You can see the volatility that started to increase as we started to move down, and the old adage, the bulls climb up the stairs, the bears fall out the window, is obviously applicable here. The question I often get asked is, how do I keep my head when these wild market moves take place? You'll notice I've got no lines and indicators on my chart, so one simple thing we can do is to start to add those things back on. Let's draw them back on, and you can see straight away I've got a flurry of lines and charts, but it's pretty simple. We've got this green channel that we broke out of quite recently on the move down. You can also see the 200 period moving average here in purple, and then the 100, the 50, and the 20 period moving average. The other thing you can see on this chart is the 200 period Bollinger Band down at the bottom here, which we broke through. And if we zoom in, you can see that we've broken back above the trend line, the 20 period moving average and the 50, and holding above that black line. So the first thing you need to do is to add some structure to your chart so that you know what's going on, and then it all becomes a little bit more simple. The objective here is to get rid of worry and fear and doubt and chaos in your mind, and focus on what the chart's actually telling you. Very simply, we moved down about 25% on the Nasdaq, we've entered a bear market, and we should be looking to sell. There's no need for panic and there's no need for rush. Since that move down, we've had about 2 weeks of consolidation, retracement, and movement back up to the moving averages. Notice how we tagged the 200 period moving average on the first attempt on the retrace, and we've also tagged it now a couple of days ago last week on the retrace again. That level now acts as resistance, as does now the channel bottom and the 100 period moving average and this yellow order block in between. So by adding a couple of lines to your charts, you can determine what sort of structure we're trading in, and you can determine the direction in which you want to be trading. When we see these massive moves, the natural instinct is to panic, to FOMO, to enter trades more rapidly, and getting caught up in the sort of cut and the thrust of the market. Everything else is going crazy around you, and your job is to keep your head. The idea is to not panic, not FOMO, not to add massive size to your trades, but to look for key moments in these big moves where the market might be turning and reversing. We can identify levels like the 200 period moving average, the channel bottom, the 100, and various other levels above us now that we know we want to sell into what's now become a bear market. This doesn't mean we're going to be correct or right. It doesn't mean that this market actually will turn out to be a bear market, but that's the way it seems at the moment. So when things get crazy and wild and it looks like a madhouse, you need to identify the direction and then key moments and levels on your charts where you might want to act. We can go from a naked, chaotic chart like this one where there appears to be no rhyme and reason for what's going on, and then just add a few diagrams and drawings to make sense of what's going on. This chart's very cluttered. I don't normally have so much clutter on my charts, but I always have the basics. I have horizontal lines, trend lines, and the 4 moving averages, which keep me in check and keep me in the right direction. All of the moving averages are now angling down. We're below 2 of them. The 20 is curling up, and we are above the 50. But in the bigger picture of things, we're in a bear market. So getting back to the simple question, how do you keep your head when all about you are losing theirs? Well, put some structure on your chart, some lines, horizontal lines, moving averages, keep it simple, determine a direction, and look for those key moments in the market where you might get a turnaround. And there's no rush. If you're swing trading, you only need to look at your charts every 4 hours or once a day. There's no need to rush into trades. Take it easy, keep it cool. And when everyone else is going a little bit mad, seemingly blind, well, you know, in the land of the blind, one eye is king. Take care.